well, we made the commitment in Japan, which I did 5 years ago, and that was just overwhelmingly, it was compelling.
Well, tell them the story of the Japanese investment. That should be told again. That's a nice story.
Yeah.
Yes, we are here with two very special guests this morning, Warren Buffett and Greg Abel, both of Berkshire Hathaway, and they're in Japan. But we really want to start with why you're here in Japan.
Well, tell them the story of the Japanese investment. That should be told again. That's a nice story.
Yeah. Well, it was pretty simple. I mean, back when I started, other people were going through Playboy, and I was going through Moody's, basically. And there's a movie out called Turn Every Page, which I saw again for the second time a couple of days ago, Lizzie Gottlieb, and I recommend everybody in this world watch that, because I turned every page in the past. And I did it for thousands and thousands of pages in Moody's, and I did it at the Department of Public Utilities in Boston. I did it in the insurance department. You just kept turning pages. Well, that goes on for a while, but now we need big ideas in order to find things. And what was your question, Charlie?
Tell them about the Japanese.
Well, the Japanese thing was simple. I mean, I like looking at companies. I like looking at figures about companies, and here were 5 very, very substantial companies, understandable companies. Most of them, maybe all of them, we'd done business with in a dozen different ways. If you go a couple miles from where this place is, our last coal-generating plant was built by one of the companies. So here they were sitting as a group where they were earning, we'll say 14% on what we were going to pay to buy them. They were paying decent dividends. They were going to repurchase shares in some cases. They owned a whole bunch of businesses that we could understand as a group, although we didn't mean we had deep understanding on any, but we seen them operate and everything. There wasn't anything to it. And at the same time, we could take out the currency risk by financing in yen, and that was going to cost us a half of 1%. Well, if you get 14% on one side, a half a percent on the other side, and you've got money that, forever, and they're doing intelligent things, and they're sizable. So we just started buying them. I didn't even probably tell Greg until maybe 6 months after we'd gotten going, and then when we hit 5% in all of them, we announced on my birthday and at 90th that we owned over 5%, and recently went over for the first time to visit with them, and we were more than pleasantly surprised, delighted with what we find there. And now we own 7.4% of it. We won't go over 9.9 without their agreeing, and we sold another 164, whatever it is, billion of yen.
Would have done for us if we only had $5 billion or something, and it made $10 billion simply in that way.
Yeah.
We would look like heroes. Now $10 billion just sort of disappears as a little dot in Berkshire's reports.
But it's fun.
And it is fun, and it is $10 billion.
And Charlie says it keeps me out of bars whenever I talk to him about it. And I probably talked to Charlie about this the year after I started. But who knows? I mean, I knew he'd like it. I mean, obviously,
we tried to do every dollar we would do. We could only do about $10 billion.
Yeah. Well, not even quite that much.
Yeah.
But we are $4 or $5 billion ahead plus dividends, and we got a carry that's terrific, and they welcome us, and they should welcome us, but we love it the way they're operating. We're not there to tell them what to do in the least. But we did say we never go over 9.9, and we mean it, and they know that we'll be true to our word. And I went over there partly to introduce Greg to those people, because we're going to be with them 10, 20, 30, 40 years. from now, and they may occasionally find something that we can do jointly, and they look forward to doing that, and we look forward to it. And in addition, we have some other operating businesses in Japan. So, Greg, do you have anything?
The only thing I would add is that, one, as Warren, you went over there, it was to build the trust with these Japanese companies, because we do hope there's long-term opportunities. But fundamentally, as you highlighted, they're an incredible, they've been a very good investment. I'd also highlight the 5 meetings we had were really quite remarkable. I mean, these companies, the culture and the history around it and how proud they are, there's just moments of learning from them. So it was just a great experience to spend really 2 days with the 5 companies.
And an issue that we intended to be 56 billion of yen that we were issuing and selling turned out to be 164.4 or something like that. Everything's worked so well, and as Charlie says, it doesn't move 500 billion of net worth that much. But this one is, it will keep adding over the years to Berkshire's value with this very widespread, probably $400 or $500 million a year. And we'll just keep looking for more opportunities. And Japan, Berkshire is the largest borrower corporate borrower outside of Japan that exists. And
Yep.
we didn't set out to be that, but it's turned out that way, and we're not done. I mean, in terms of what may come along there, and we have some direct operations there, as I mentioned, and we've got some really wonderful partners working for us, and I don't have to do anything.
Yes, we are here with 2 very special guests this morning, Warren Buffett and Greg Abel, both of Berkshire Hathaway, and they're in Japan. But we really want to start with why you're here in Japan, why this trip is happening. Warren, you've spoken to a couple of outlets over the last couple of days just about the trading houses that you've purchased. Those are the people you've been talking to. But why did this trip happen, and why did those investments happen to begin with?
Well, the investments began maybe close to 4 years ago, and I was looking at company after company, as I'll do every day, and I just thought these were big companies. They were companies that I generally understood what they did, somewhat similar to Berkshire in that they owned lots of different interests, and they were selling at what I thought was a ridiculous price, particularly the price compared to the interest rates prevailing at that time. And so I started buying all 5 of the 5 largest trading companies. By my 90th birthday, August 30th of 2000, whatever it was.
2020.
Yeah, we had bought just somewhat over 5% of each company, and we were buying identical amounts. So we announced at that time that we bought this 5% interest in each of the 5. I wrote a letter to the CEOs of each of the companies saying the same thing, that we would never buy, Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in, and their results have exceeded our expectations since we purchased the group. I think their dividends on average have gone up 70% or something like that, and we now own 7.4% of each of the companies, and I just. Greg and I together, we wanted to come over and talk to them, and so we got on a NetJets plane and plug and flew over, and we have had a terrific time meeting each of the 5 sequentially over the last 2 days, and it's been fascinating, and we feel even better about we couldn't feel better about the investment. And over that time, we've sold periodically yen-denominated bonds. So more or less, we don't do it precisely, but we've insulated ourselves from exchange rate changes. So it's worked out very well so far, but we'll be in these stocks 10, 20 years. I mean, we weren't buying with the idea they go next week, next month, next year. But we have had revelations about each of the companies that, well, Greg and I are just fascinated by it.
Right.
Was it worth the trip?
Oh,
absolutely. It's been a great trip. I think Warren, I mean, they've been exceptional in how they've communicated, both with their performance, but just their approach to business.
What did you learn since you've been here?
I think the thing that stands out very quickly to us is they came to the meetings wanting to build a relationship and strengthen it. So they understand we've invested in their companies, but from the very get-go, when we start the conversations with them, they come each with their own story, and it's around building trust in that relationship with them.
Meaning what? That there are other potential deals that you all could do together?
We've clearly made it, each time we've met with them, we said we very much like the core investment, but to the extent they can identify an incremental opportunity that we could do with any of the 5 companies, we would very much evaluate it quickly. And Warren highlighted the bigger the better, and that he'll answer the phone on the first ring.
and we'll never run out of money. I mean, they can call us anytime, and it may be that what they have interests us, it may not, but they'll have an answer, bingo, and if we make a deal, the money will be on the way, and we look forward to it, and I'm just astounded at how they're all different and they're all the same at the same time. I mean, we learned about 5 different individual companies, but it was not exactly what we expected. It was better than we expected in every respect.
People look at this and say, okay, Warren Buffett is putting his stamp of approval on investing in Japan, basically. Is that an accurate read?
Well, it was an accurate read, but it was an accurate read a couple of years ago, too. I mean, I was confounded by the fact that we could buy into these companies and, in effect, have an earnings yield of maybe 14% or something like that, with dividends that would grow. They actually grew 70% during that time. And the people were investing their money at 1/4% or nothing. And that 1/4%, if they put it out for many years, wasn't going to grow, and the 14% was more likely to grow than not. And if that doesn't look like something sensible to me, that's as easy as it gets. But it's turned out to be better than I thought it would be.
Are the opportunities in Japan better than the opportunities in the United States right now?
Well, it isn't one versus the other. We can do both, but we do have more money through equities. Now we own a lot of Coca-Cola. Coca-Cola does a lot of business here. Apple does a huge amount of business here. But so we do it indirectly through American investments. But we have more money in terms of equity securities in Japan than in any other country in the world, and all of Europe combined. But we just thought we like
excluding the U.S.
Excluding
and
the US,
that message really resonated with them. They were surprised that Japan, outside of the U.S., would be Berkshire's second largest place for deploying our capital into equities.
Right.
Yeah.
What's maybe the most surprising thing you've learned since you were here, each of you?
Good.
Well, it's interesting to us. Well, we like each other, and we learned something about each company that I read the reports every quarter. I look at every number. I eat that up, but meeting them in person, and in the United States, 9 times out of 10, I never meet anybody we buy stock in. But this, it's true. I mean, I don't go around to companies anymore, and I prefer they don't come to us, actually. So
don't call us, we'll call you.
Well, no, they send investor relations people, and basically every company comes in and says we're the best buy in the world, and it just isn't true. It's ridiculous on its face. These people just. We read the report, or I read the reports at that time, and then Greg got interested right away. And they told us a lot of things that helped us further our understanding of how they thought, where they were going. So we came away smarter than when we came in, and that's unusual.
Yeah, I would agree, Warren. I mean, they had each their own story, and yet there were similarities, but they each had their approach to business. But the other thing that stood out to me, the more we talked to each of them, there's a lot of similarities to Berkshire. They're very much thinking long term, and they've got their portfolios, but they're thinking about how they manage the risks, and then how can they incrementally improve their businesses. And that clearly came across from each of the 5 businesses.
Our primary investments will always be in the United States. We do think it. Well, we made the commitment in Japan, which I did 5 years ago, and that was just overwhelmingly, it was compelling. It was extraordinarily compelling, and we bought it as fast as we could. And we spent a year, and we got a few percent of our assets in 5 very big companies, but that's the problem of being our size. But you won't find us making a lot of investments outside the United States, although we're participating through these other companies in the world economy. But I understand the United States rules, weaknesses, strengths, whatever it may be. I don't have the same feeling for economies generally around the world. I don't pick up on other cultures extremely well, and the lucky thing is I don't have to, because I don't live in some tiny little country that has just doesn't have a big economy, but I'm in an economy already that has, after starting out with 0.5% of the world's population, has ended up with well over 20% of the world's output in an amazingly short period of time. So we will be American oriented. I mean, if we do something really big, it's extremely likely to be in the United States. India, I'm sure there are loads of opportunities in a place like India, and the question is, do we have any advantage in either insights into those businesses or contacts that will make possible some transaction that might, where the parties in India would particularly want us to participate. I would say that that's something that a more energetic management at Berkshire could pursue, because we do have the reputation now. Berkshire is known, not like it's known in the United States, but it's known around the world, and our Japanese experience has been fascinating in that respect. So there may be an unexplored or unattended to opportunity in that area. I'm not the one to do it, but that may be something that in the future it might be opportunities. There are opportunities. The question is does Berkshire have some kind of advantage in actually pursuing those opportunities. If you were energetic, had some way to become a buyer of or a party that people particularly wanted to do business with. Japan was great, and India could be great, but India and Japan aren't the same. I mean, I don't adapt myself terribly well to different cultures, and some people are really good at it, and almost anybody's better than I am, but I stumbled into one or two, but that could happen in Act Two of Berkshire Hathaway. Taiwan Semiconductor is one of the best managed companies and important companies in the world, and there is not, and I think you'll be able to say the same thing 5 or 10 or 20 years from now. I don't like its location, and I've reevaluated that. I mean, I don't think it should be any place but Taiwan, although they will be obviously opening up chip capacity in this country. And actually, one of our subsidiaries that we got in Allegheny is participating in their Arizona construction activities. But it's a question of, we would rather have the same kind of company, and there's nobody in the chip company, there's no in the chip industry that's in their league, at least in my view. And the man that was a 91-year-old or so that connected with it, that I think I played bridge with, and in Albuquerque, and marvelous people, marvelous company, but I'd rather find marvelous people. I won't find it in the chip industry, but marvelous people and marvelous competitive position and everything. I'd rather find it in the United States. I feel better about the capital that we've got deployed in Japan than in Taiwan.
That's not the only thing you all have done since you've been here, too. You were meeting with a subsidiary today as well. This is the last time you were in Japan, Warren, was 12 years ago, and it was to come to the factory, right, from the representatives who came to visit you today.
Yeah, I met just a few hours ago with 10 of the very important executives of a subsidiary of Berkshire's that we own 100% of, ISCAR, and the accomplishments of that company have been extraordinary. And maybe 15 years ago or thereabouts, it bought an operation here in Tangaloi in Japan, and I visited that plant right after the earthquake, and it was amazing to me. And it was a chance. I was hoping to get to their home grounds,
Fukushima.
but but because of the problem with flying helicopters and everything during the season, they all joined me a few hours ago, and it's an incredible. ISCAR was one of our pride and joys in terms of acquisitions. It came from getting a 1-page letter, 1.25-page letter through the mail, and in that 1.25-page letter, the person talking to me, who I'd never heard of before, I hadn't heard of this company, he told me more than these 60-page brochures that the investment bankers would bring out. He told me how much he wanted for the business. He told me what it was like. He told me why it fit into Berkshire, and he said he and a couple of other people would come over if I liked what he was suggesting, and they came and we made a deal, and got there on a Friday, and we ran into one kind of tax problem, and a fellow named Danny Goldman worked all night, and on Saturday morning he said, we worked it out, and I said, well, and you've got whatever it was, $5 billion in overall valuation, and we made a deal, and then not too many months later, Charlie and I and a couple of the Blumpkins and Sandy Gottesman, and we got on a plane and we went over to see whether there was really anything there that we'd written the check for. And it's just been an amazing company. It started with nothing, except a fellow named Steph Wertheimer with zero going into competition located in Israel at that time, and now it's spread around the world. But it had nothing, and it was making little tools that other people made, and they already had the customers in the United States. They could buy the tungsten in China, and these guys, Steph starting it, but later with Eitan Wertheimer, and then with Jacob Harpias, who runs it now, is an incredible manager. They've created a business that we are extraordinarily proud of. We love what they've accomplished, and they don't stop. They just keep going. And in Japan, they just bought a 51% interest in another company that fits in. ISCAR will never stop. Berkshire will be proud of it 20, 50, 100 years from now.
And it was interesting, Warren, didn't you think that one of the managers asked specifically, how did the opportunity to invest in ISCAR IMC, how did that come to you? And you shared that story, but it's great to see their interest and how they are become part of Berkshire. And they highlighted in Japan, for example, IMC started with a small operation here 20 plus years ago. And now we have 3 businesses that we own 100% of. And we're going to go visit Tungaloi, which has a very significant plant in Japan. And then they've added 2 since, and now we own, just recently, starting April 1, we have 51% of another joint venture company. So they've been amazing at establishing a base and then continuing to grow it.